Hey everybody, welcome to
Morning.
week 251. Yes, 251. Hopefully, you guys were able to join us last week for our 250th week anniversary with the Dumb Kings and all kinds of fun and frivolity. That was a lot of fun, but it's because you guys keep showing up. That's why we keep rolling this thing out. And so, hey, there's nothing new that's been going on lately, so it's going to be really boring. No, I'm just kidding. It was the hot topic, not hot pockets, but hot topic from last week at the week anniversary was, hey, what's going on with these tariffs and blah blah blah. Well, it's been an interesting ride, hasn't it? So we've got the amazing Austin Palmer back by popular demand because hey, I had my lunch meetings canceled by a friend because he's dealing with the roiling markets and people are calling him in panic. So, anyway, not that you haven't had any of that, Austin, I'm sure.
No,
So,
no, not at all.
the world is falling, but Austin is above the world. So, right now, that's a good thing.
That's
Uh,
right.
we've got Adam and Jack on here as well, which is fantastic. Um, And before we tip this thing over to Austin, Jack, Adam, anything that you guys want to address? Because I'm sure something's on your mind.
Um, Go ahead, Jack.
I was going to say there's some very important news that all of you may have missed, and I didn't want to spoil it with our pre-discussion a minute ago, but I know we're going to talk about the markets, but very important news that a new analysis ranks UNC Chapel Hill's men's basketball team as the most valuable in the country, worth 378 million, edging out Tobacco Road rival Duke at 370. The study by Indiana University's Ryan Brewer calculates value based on revenue, cash flow, and projected sustainability, imagining what college teams would fetch on the open market. So just make sure that everybody's aware of that, and then now we can
That's
proceed.
important.
It is
I
very
mean,
important.
it
So
was
Hey,
breaking news across all the news channels this morning.
yes,
There was I thought it was an Amber Alert or something, but evidently that's what it was, Jack. Thanks for keeping us posted.
yes,
hey, Jack, does that
yes.
mean they could use some of that money to maybe hire teachers for those classes that didn't exist? With some
Uh,
of
Oh,
I'm just,
yeah.
I'm
oh.
Yes.
teasing.
Wow. A burn from the past. Touche. Well done.
Hey, it's always interesting here. I
Well, actually, now we have to pay Belichick. So that's, yeah,
That's yeah.
yeah.
buy the dude some sleeves, man. I'm just saying, buy some sleeves for that dude. Okay. Um, uh, any insights into the US dollar compared to the euro and pound? Thank you, Jacob. Good question. Thoughts?
I'm gonna let the money people
Oh
discuss it.
God.
Austin, you're on the spot.
Um, I don't want to be on the spot with this. I'm going to keep saying, does it matter? I don't know. If you're going to Europe or Japan, I guess it does, but I'm pretty sure 99% of the things I buy for the rest of my life are going to be dollar denominated. Portfolio wise, diversify. I mean, if you've got international stocks and you've got US stocks, whatever it does, it's going to balance out. But I'm not going to get into a currency trading discussion. I just don't have anybody that does that.
Um, Not answering the question directly, other than, hey, obviously you're right. I'm with Austin that I find it interesting that the number of clients that have successfully entered into currency hedges or currency trading that have international operations, which in this case would mean, I sold some, if I just use the UK as an example, where do I have, potential problems? You know, I sold something in dollars, they have to pay me back in dollars. Um, that I'm generally fine. Where I get into problem is when I sold something they're paying me in pounds, and then I have to re-dollarize, those pounds.
Yeah.
And interesting boatsman fun side fact that actually just happened to the boatsman family, because we had to pay for a semester abroad in euros that the company that we paid subsequently canceled the trip, and we got a refund in euros, and our refund was less than what we paid because
Oh,
of the difference in the dollar relative to the euro between September when we paid the deposit and February when we got our money back. So God bless the boatsman family for still trying to pursue their $1,000 of currency fluctuation loss. So not a big shocker there that we've been ghosted, by the company, because we're not getting that back. But kind of the only other thing that I would say before turning this whole party over to Austin is that I would generally align with the statement, and at the same time, it's such a complicated problem that I don't see the sledgehammer necessarily fixing anything. So this is just me sharing my opinion, Jack. If you want to tell Shoemaker Legal to, go ahead and edit out this portion of the video. Nobody in the Western industrialized world is generally happy with China and
right.
China's theft of intellectual property, China's manipulation of its own currency, China's closure of its markets, to foreign goods. Well, when I say foreign goods, I mean they do buy a lot of freaking iPhones. So like it's not, it's not all closed. So generally, globally, people aren't super happy about that. And at the same time, if China magically said, okay, we're sorry, we're going to drop the tariffs and go invest in factories in the US, you still have the whole problem of theft of intellectual property. I mean, now it's, now they're corrupting US people. Here. So it's like, it's one of those things where it's like, it's such a big problem that, a tariff is like only one element of a broader, massive trade problem. And related to that, we have a bunch of clients that do import stuff from Vietnam because the manufacturing is Vietnam, and they all know that Vietnamese factory is owned by China. So it is nice to see that we eased up on Vietnam just for our clients' benefit, yet that did not solve the China problem. So it just it's one of those things where if these were easy problems, they would have been solved decades ago.
So jump in on one quick thing as it relates to travel. So I just got back from London and a cruise in France. I got some euros at the bank before I went just to have some cash on hand. Most of our purchases, though, I used a credit card. So Chase, Amex, Citi, whatever. Where you're getting typically the best rate of the bank that day. Every charge as it relates to the exchange was better than the rate I got walking in and exchanging my dollars. So I guess my question would be, I'm not a big cash spender. I mean, maybe for a week and a half, 2 weeks, we had 600 euros, just something to carry around. But I don't know. people who go to Europe, I don't think a 10% swing in currency is $60. So that's just
Yeah.
immaterial. I realize that the credit card could also have that 10%, the hotel stays and all that, but I'm just not going to worry about that. But I've found the best rate is to just accept that the credit cards, the big banks, will give you the best rate you're going to get.
Yeah.
Hey, before we jump into this, this is a question for you, Adam. Any new insights as to what to expect from the IRS in the next few years, specifically checks and balances with being conservative with cost basis versus being a bit looser or liberal with estimates?
I don't think that the yeah, I mean, it's not that I'm going to take any more risky position than I was going to take previously. But at the same time, my own feeling is, well, now it's even less likely that I'm going to have a problem with it, because who the frick is going to look at it? So I'm not advocating that to say now use that as a license to cheat. No, I mean, nobody should ever cheat, on their taxes. You should be legally aggressive, which is what we do and advise our clients to do at BGW. But I don't foresee as much enforcement, because I just don't know how they can do the enforcement. In other words, like, if you don't file your tax return, and then you should still get a notice for that. Like, I don't see any of that stuff changing, but it's just mathematical. Like, they will not be able to do the same volume of audits that they currently do, which is what we think of as enforcement at BGW. At BGW, what we think of as enforcement as, you got drawn in the lottery and now Jack is under audit. By the way, we are recording this. I'm going to send the IRS because they really should audit Jack. I'm just kidding with that. So Jack is now going through an audit, and we're having to support positions that we've taken on the tax return that we're aggressive. We either win them or we lose them. Most of the time we win. So I just see that the instances of that going down, relative to prior years.
So
Yeah.
for the record, you were the one that told me I could take some of those deductions. So
Right back at me.
Oh boy.
I do want to share, and I found this, or I read this article. It was Tuesday, maybe, in the Wall Street Journal. No, it was actually last week. Well, I read it this weekend. It was in the Wall Street Journal last week. I was a little behind on my reading, but interesting article about, and they literally pulled apart the iPhone 16 to show you what the impact is on the cost of the phone. They didn't have, I'm bringing to you the better version of this because they didn't have this little thing that was pulling back and forth. I don't know. Is it in motion on your
yeah.
screen?
Mhm.
Okay.
Yeah.
Cool.
Yeah. Very
right.
cool.
But what caught
Nice
my eye
little
is this.
anime.
Maybe I can zoom it in a little bit. So it is, when they pull it apart, you can see that the current costs in pre-tariff dollars as to where and the source of each of these. So it looks like the only thing out of these, other than the other components, is the memory that is manufactured in the US. So you see Taiwan, South Korea, China, and then you see that, okay, all of these pieces would have cost them $550. And now adding in these tariffs and at 54%, which is interesting because I think that they increased it to 125. It was like 103. It was 125. So he doubled down. I don't know how they got to 54% other than maybe, as a percentage of the total, and maybe different tariffs with all these components. But anyway, the point of it is that you add another $300 to the cost of the phone to get to $846. Again, that's the cost That's not necessarily what they're selling it to you for, because they're already selling these iPhone 16s. I think in this article they said, yeah, the 256 gig version is $1,100. And if
Yeah.
you're lucky, you might find someone, it on sale somewhere that they're giving away the phone or they're financing it. I love how they put you on a 24-month payment plan so that you're locked in with them, you're paying it, but you're paying it really with interest kind of built in without maybe unbeknownst to you. So anyway, thought it was interesting how they pulled this stuff apart, and it's just an example of an impact on something that all of us use, not necessarily the iPhone, but maybe just a phone device.
This is an iPhone 16 Pro, and I like it. I'm glad I bought it before the tariffs. Yeah, that's interesting. Joseph did weigh in on this, and I'm going to tip this to you, Austin, because I don't think we want to give any buying advice.
No.
But Joseph is trying to give us some buying advice. You want to take that one?
No, no, no.
Well, everybody can see it in the chat. We're not going to advocate one way or the other on it, okay?
I will advocate buying low, selling high, and doing it in stages. So, using simple numbers, if the market's down 5%, and I'm using a moderate portfolio, so 60-40. If the market's down 5%, you were to take 2% out of bonds or cash and buy stock. Could it go down further? Obviously. All right, so you did it again at 10%. You did it again at 15 or even 20. If eventually it gets back to even, you've made money at every stage. You just have to be willing to be wrong. And so I had a client yesterday say, why don't you wait for it to go down 20%? And that sounds good, right? But first of all, nobody rings a bell or tells me, hey, it's going down 20% this time.
Right.
Most of the time it goes down 5 or 6% a few times in a year, and never much further than that. Sometimes it goes down 10%, but not much further than that. Occasionally 15, occasionally 20, occasionally 25. You might get it right one time. So you waited and you bought when it was down 25, but you probably missed out on 10 or 15, 5% pullbacks. And it becomes mathematical, so that I tell folks, I'm not guessing. I'm not trying to be right. If you believe that it will come back to even, then buying at a discounted price is always a good idea. But you heard me use 2%. 1% is fine. 3% is fine. But incrementally, that's my advice to folks. Don't be scared of it, because when stocks are down, everybody says, well, the stock market's down, whatever, 10%, or today it's down 3% today. Okay, but somebody is buying it. There are a lot of sellers, which is what causes it to go down. There are more sellers than buyers, but at the current price, somebody is buying it.
Yeah.
So looking forward, who do you think is right? The person getting rid of things when they're down, or the person who's buying when things are down? And I tend to be optimistic and say, as of February 19th this year, we hit an all-time high. Therefore, anybody who bought when things were down at any time prior in history was right. I'm going to go with the person buying low is more likely to be right going forward.
I like that. It's just hard to keep emotions from forcing you, or like tempting you. I shouldn't say forcing you, because it's always a choice, but tempting you into that panic kind of mode. What are you doing, Austin, to allay your fears, or the fears, especially of people that are in retirement age or approaching it?
So most of the time it's just rational thinking. So I'm not recommending the stock. I'm using this as an example, piggybacking off of Jack. If we say an iPhone is $1,100, the 256 memory,
Yeah.
I bet if I opened up a store and said, I'm selling it for $990, I'd sell a bunch of iPhones, right?
Yeah.
It's 10% discount. And yet, if I went to those same people and said, Apple stock has gone from 220 to 198, people want to sell. So you believe in the iPhone, you're willing to buy it 10% down, but you're not willing to buy the company. Interestingly, before the tariffs, remember they made it for less than $600.
Yeah.
That's a pretty high margin business, right? Whether they're selling it built-in interest or not, even if they sold it at 900, those are 50% margins. That's pretty nice. We don't treat stocks the way we treat anything else. You know, here's a pickup truck and it's all decked out and it's a King Ranch or whatever. It's $110,000, but I'll sell it to you for 99. People would come out of the woodworks, but they wouldn't go buy a stock down 10 or 15% that's still constantly making money. So I use those anecdotal things just to point out the fallacy of it. From a true peace of mind, the work should have been done before things got bad. So if somebody's retired, there should have been a plan that said, you're going to be okay even if, and then in the allocation of the portfolio, depending on them, there should be enough money set aside based on what they're withdrawing. So if we say $1 million and somebody's pulling out 40,000 a year, and we have 40% in cash and bonds, even without the interest, even without the dividends on the stocks, that's 10 years worth of their withdrawal, right? So in my mind, that gives us 10 years. Yeah, stocks may go down for a little while, but it's unlikely that they're down and stay down 10 years. So the work should be, if somebody's going to panic in that scenario, then maybe they should have been 50-50. Maybe they should have been 40% stock if that's the peace of mind. But after it's down is not the time to make that adjustment.
I also think that there is the psychological aspect of it. And I mean, we were talking about that, but I mean, another part of it is, I think, self-induced or forced upon us. And what I mean is that I went, there are several partners in my office that have TVs in their office and it's tuned into the tickers. I personally, and I've said this before, cannot do that. I mean, I purposely put my head in the sand. I have not looked at my holdings, my portfolio, in the past week. And because I don't want to be stressed out about that, knowing that. But I mean, also to, what we're talking about is age. At my age, I'm still young enough to be able to be, know that things are going to be okay when I start pulling on those things. A different conversation with my parents, different conversation with my kids that are interested in, okay, what's going on, and they see stuff and they, so that's not necessarily true. I did look at my stuff only because part of their stuff, some of their stuff is in my stuff. And so I kind of saw it. I tried to not see that page, but, so and then it's in front of us all the time. I mean, you turn on the news, on your phone, you may get an alert from, not even an alert from a reporting app like the stock ticker. You may get something from Fox News that pops up on your phone that says, okay, disaster looming or disaster occurring kind of thing. So a lot of it is to also, I think, having the self-discipline to, if you're going to be in tune, literally, figuratively all the time, then you need to give yourself some grace and not go stressed out about it, I think. So that's my unsolicited, non-medical, psychological guidance for the day.
You're hired. Come on, we could use you.
Yeah, I love
I'll put
that.
you on the phone with people all day.
I mean, think about it. I remember when 0809 crashed. I mean, that was pretty severe. And our house, and we got wiped out financially, except for our house. And then when I looked at what the value of our house was at that time, is like, oh boy, because I'm like, what are we going to do? But we didn't sell, thank goodness. And man, that thing came roaring back when it came time for us to sell in 2015 and move back to Charlotte. So, it's the same thing, like unless you got to pull the money out of it and sell that thing right now, why even bother? It's just mental angst. John, thanks for chiming in here. He says, can you opine on the genius of Warren Buffett, who had been ridiculed in late 2024 for building up a $300 billion cash position in Berkshire Hathaway, and now looks like the smartest guy in the business when he can go on a buying spree with the market down? What makes Buffett different from normal investors? Why does he stand out? Well, he lives in Nebraska and he still lives in his old home and drives an old Cadillac. So that makes him different. But and he's also, what is he, almost 90? Something like that.
So,
Go ahead.
so think about a portfolio. I mean, Berkshire Hathaway, for all practical purposes, is a portfolio, right? It's simply a amalgamation of a bunch of different companies. They own individual stocks, but they also own companies. The market's been up 15, 20% for 2 years in a row. Same thing I've been saying, he's doing the same thing. He's got a value 2 years ago. It goes up, I'm just making this up, it goes up 20%, and then it goes up 20% again. If he simply rebalanced and said, I want 1, 2, 3% in cash, doesn't that make sense? I mean, so if you had $1 million and it went up 20% and 20%, that would be 440,000 in gain.
Yeah.
So the 300 billion is a big number, but in terms of a percentage of the total value of Berkshire, he's always going to raise cash. And as it grows and grows and grows, he doesn't typically have lots of bonds. I would say that's a function of the normal rebalancing that you should have done after a year or two of 20+% gains in the market.
Yeah, and kind of piggybacking on Austin, just Adam's opinion. If you combine that with, most forecasters were predicting leaning more towards recession, combined with the talk of all the talk of, in other words, like, if tariffs is going to be real, most people figured that there was going to turn into a poop fest in the stock market, and that's what happened. So
so we rebalanced our portfolio on February 26th. That was 1 week after an all-time high. Now, I don't manage billions upon billions of dollars like Mr. Buffett. I'm not claiming to be Mr. Buffett, but I can assure you, well, that was the right thing, right? So theoretically, stocks were sold high. We rebalanced at or near the all-time high in the market. I don't think anybody's called me and said, boy, you were a genius. We had less stock during this downturn. But it's Warren Buffett and the numbers are really big. So 300 billion. He actually was asked about that a week or so ago. There's an article out there. And he said he wasn't prognosticating of a market pullback. That was just normal course of business. He said people were reading into that, but I'm going to stand by. That was a normal rebalance. Big numbers.
Could you explain that a little further, why you would do that at that time? I mean, you say it's normal, but why is it? Because it seems kind of counterintuitive that you would, at that time, really do anything unless you're way leveraged in that direction. And that, I mean, I guess what I'm asking is that what makes that normal to do the rebalancing at that time?
Okay, so I'm using a spreadsheet just to make sure I don't make a mistake. So we've got $1 million portfolio. I'm making up these examples. This is not a particular thing. It's 60% stock. That goes up 20%. I'm just making a number. And the bond side of the portfolio went up, we'll just say 5%, make it simple. So our $1 million in that scenario would have gained a whopping total of $140,000, meaning we've got 1,140,000, but 720 stocks have outperformed bonds is the stock value. So you've gone from, and this sounds silly, but you've gone from 60% stock to 63% stock. So on one hand, you say, well, I want stocks to go up. Yeah, you do. But on the other hand, that's 5% more risk. So you would rebalance there and say, not that I'm saying go back to 600,000 in stock. I'm saying take 60% of the new number. So 684,000 in that example instead of 720. So therefore you take 5% of your stock off the table and buy bonds. That's selling high, buying low. Conversely, that stock now has gone down 5, 10, 15%. And those bonds likely have gone up 1 or 2% in that time. What I said at the beginning, okay, we took 5% off when it was up. It's the same. We're not buying something new. It's this, we still own the same stuff, just less of it. Now it's gotten cheaper than where we sold it. Why wouldn't we take some of that money and buy it back cheaper? And it's just a function of math. I'm not timing the market. I am because of rebalancing, but I'm not. It's a function of math. Is that overly? I feel like I'm such a nerd. Sometimes I just speak in spreadsheet. Now it makes me get up and write on a whiteboard like he's got behind him. But it made sense to me. Did it
No,
make sense to
that was perfect. I mean, we had our whiteboards in our heads going, and you used nice round numbers. So yes, thank you.
Yeah, Austin's good like that. So if you want to stump the chump on Austin, just ask him, and I don't know that it'll stump him, but just ask him, a complex math problem, and he can do it in his head while the rest of us have our heads spinning. So he's good like that. Other questions, stuff that's on you guys' minds. It might have to do with tariffs. It might have to do with stocks. It might have to do with, hey, what do we do when we're buying stuff, given this uncertainty? Because the one thing that seems to be a constant is uncertainty, right? I mean, when we think that we've got certainty, hold on. And there's so much uncertainty all over the world. I mean, you got Iran that's getting ready to do whatever they do. China, I saw an article this morning. Why doesn't Xi just pick up the phone? Well, because he's got pressure from other Communist Party people inside that are just waiting to pounce, so it's like there's all this complexity all over the world, right? And so what do you do in the middle of all this uncertainty? I'm going to still say go back to 5 years ago. What did you do when none of us had seen any of this stuff? I heard a rumor. I don't know if it's true. And it's highly doubtful, but who knows? Supposedly, some of the globalists were pushing for a 10-year pause and shutdown. Can you imagine? Like, I don't know, but we were told 2 weeks and it ended up being a couple of years, but 10 years, like that would have just destroyed the world probably. Thank goodness we didn't do that. But think about what you did in your own company 5 years ago to get lean, mean, and survive. And it seems like some of those lessons are probably worth deploying right now.
Yeah.
In the middle of, uncertainty.
I think Austin, if you could kind of get to psychology for a little bit, I'm 50, about to be 52. You know, if you kind of break down, hey, if you're a 30-year-old, this is kind of how you should be thinking. You know, if you're 52, this is how you should be thinking. If you're 65, this is how you should be thinking. And if you're 80, this is how you should be thinking.
Oh,
You know,
that's good.
given all this, I know that's 4 spectrums, but you basically have like a long time, medium time, shorter, and then, you know, real short.
And I'm going to pile on to that, make it a little more complex because I'm looking at an article. It's a Morgan Stanley article, and I found it again because I saw it yesterday, and they were making it in those 3 tiers that Adam just described. So they were also talking about, well, if you delay your retirement by just 7.5 months or increase your savings by less than 1%, then you'll get right back on track. And, and then, the later career couple, it's decreased spending by 2%. So, and maybe a shorter delay in retirement. So in addition to talking about, numbers, if you would maybe share what you think about the need to delay your retirement for a short period of time as well.
I'm going to address that real quick. There's a catch-22 to that, Jack. The longer you wait to retire, mathematically, the more money you're going to have. Right up until the day you die.
Right.
And then your kids are flying first class, or your spouse or whatever. And meanwhile, you were flying coach or not traveling and continued working 60 hours a week so that you could never enjoy it. But that will be
zero.
Not die with zero, but I think there is a little bit of so my children are getting older. Leah's 31 and the boys are 18 and 17. And not that money's no object, because I like my wife and myself more than them. But as I think back in my life, if you said to me, so my mom's 79, I'm just going to make her go to 90. If you said to me you could inherit $250,000 from your mom in 11 years, or go back in time and she could have strategically given you $5,000 when you bought the house, $5,000 when each of the kids were born. And for a grand total maybe of $20,000, $30,000, $40,000, but 20, 30 years ago, which would be better for me? I'm more in that camp. I want to, all right, Leah, you're working, you're putting money in the 401k. I know you want to do some fun things, but if I give you 2,000, will you put 1,000 in your Roth? I'm just picking random numbers. I'm thinking like that. The more they do for themselves, the more we're willing to do. How's that? Versus, I think our parents, and certainly their parents, were accumulate this mass to drop it on the next generation. I'm not in that camp. I used to be. I was brought up to think that way. I'm not in that camp. I'm going to use family again because I use this with clients. My mother is 79. I'm 53. Leah's 31. All else equal, I would say we're the average people in our age bracket, meaning in terms of risk. None of us is particularly aggressive or particularly conservative. We're just kind of middle of the road for our age bracket. Leah, I would call her portfolio aggressive. It's 85, 90% stock. She's 30 years from using her retirement funds. I'm 70, 75% stock. I'm in my peak earnings years. I've got some cash reserves if things go wrong. But I'd like to work another 15 or 20 years, and I certainly don't plan on spending everything in the next 10. So that to me is at least a 25-year horizon for me. My mom is 79. I'm an only child, so it's mine if something happens to her. But she's using some of that, right? It's coming off. She's 45% stock. So I would classify that, Leah's aggressive. I'm moderate aggressive. Mom is moderate conservative, maybe is better. But then you get nuances in there. Some people are jittery with the market. Well, if somebody was Leah's age and a little jittery, maybe they should be moderate aggressive, not aggressive. I think you make adjustments. In a vacuum, Adam, it falls into those broad categories, but people want to, I have people all the time, well, I'm going to retire in 3 years at age 65. I need to be really conservative. My question is, are you going to use it all in the next 10 or 15 after that? No.
Mhm.
Okay. Well, then you have an 18-year time horizon. Or in my dad's case, he had a spouse that was 15, 20 years younger than him. And, before he passed, he would say, well, I'm probably not going to live another 5 or 10 years. And I would say, okay, is Suzanne? Yes. Okay, so are you going to spend all the money before you die? No. Okay, then shouldn't we, in your case, you're not spending all of it. We have enough to cover a few years. Shouldn't we look at the rest of it based on her life expectancy since it's meant to take care of her, not yours? So there are nuanced differences. I think it's a matter of asking questions. That's our role. To carry back to what you said, just like with markets, it's a bit about shifting perceptions.
Yeah.
We all tend to get myopic on my work or my life, or and money's emotional. I think
Yes,
people
it is.
forget that money is emotional. It shouldn't be, but it is.
So I'm going to lob this one at you. So there are two things that have come in. Bruce, thanks for coming in through the Q&A. We did talk about that a little bit on the front end, but I'll just toss that to you too, Austin, if you have anything else. But it says, given the chaos of the past 24 hours, not heard much on the currency market, in particular the euro dollar exchange. How closely will the fluctuations follow the variability in equities and bonds in the near term? You want to take that one?
Hang on, you're reading what Joseph, or I'm rereading it as you said.
No, this is Bruce in the questions and answers.
Oh, sorry.
Yeah, we'll get to Joseph because that he hits the same thing what you're saying about emotions, and then has some additional thoughts about that.
Yeah, currencies are going to follow. I don't know. Currencies are going to fluctuate. Go back to Brexit, though. This is not a 1-for-1, but again, we're dollar based. You start telling me about the euro and the dollar, and I feel like I'm having an argument about whether your $10 bill is more valuable than my 2 5s. It's running a bit. That is beyond the scope of my knowledge. If you're running a business and as Adam said, you're actually collecting money in foreign currencies and having to convert, you need somebody who deals in that to help you.
Yeah.
As far as we're concerned, I don't know, diversify your portfolio, right? So if you had a fund or an index that owned Exxon on the US side, and you had a fund or an index that owned Total on the European side, my assumption is since oil is fungible, all else equal, if one of them's winning because of currency, the other one's losing a commensurate amount, and it should balance. I could do the same with Hershey and Nestle or whatever, but I think you get the idea. AstraZeneca versus Merck. Diversification helps with that anyway.
Yeah, that's good. You want to take what's come in on the chat from Joseph?
Retail investors, I don't know about 90%. I'm reminded of a joke, not to pick on Joseph, to pick on myself or anybody, but the old joke of, 87.52% of all statistics are made up on the spot. I have no idea if it's 90%. I can tell you, nobody ever calls me wanting to sell when things are up, and nobody ever calls me wanting to buy when things are down. Y'all have heard me say this before. The Dow was at roughly 1,000 at the end of 1982. So 43 years later, And it's a little under it now, but we'll just call
About
it
40.
39,000. Yeah, no, it's under 40 now. Just glanced over. I was about to say 40 and I'm wrong. So it's 39 times that. Explain to me how it's 39 times higher and people got it right timing the market, right? A diversified portfolio should not have lost money over that period of time. In the short term, it did, not in the longer term. Therefore, the only way to truly create loss in a diversified portfolio is to allow emotions to override good decisions. I'm not going to comment on Doge or Trump, or I figure the last couple of times I've been on, I've alienated everybody by talking poorly about both. We have had scarier times than what's going on right now. Be it the Bay of Pigs, be it the S&L crisis, be it the dot-com bust, be it 9/11, war in Afghanistan, Iraq, the flash crash. That people forget about the flash crash. That was the computers controlling all of this broke for an afternoon.
Oh, yeah.
And we kind of write that off because it's self-corrected in a day. The computers controlling all of this, there's no big pile of US money sitting around. It's zeros and ones. It's code.
It's
It's
Skynet.
code.
It's Skynet. I'm telling you.
Yeah, I don't think Terminator's coming to kill John Connor or Sarah Connor to prevent John Connor, but boy, I'm more of a nerd than I realized that I remember that.
Well, what does that say about me? Because I'm the one who started it, right?
Yeah.
Yeah.
Emotion in calmer times should drive the asset allocation decision, the risk tolerance decision. Like I said, if you in a vacuum should be moderate, but you're an emotional person about money, maybe you should take less risk. And with that comes a likely lower return. Deciding to do that when things don't go your way is foolish. You are selling low, and then and so the question I do get, I'm tying this in, I'm sorry. The question I get is, why wouldn't you sell when the market's down 5% and rebuy when it's down 10 or 15 or 20? And theoretically, that sounds good, but I'm going to use COVID because it happened so rapidly, right? We saw the market go 36% down in 33 days. If what's making you sell is an outside influence, right? So the news, your phone, your friends, water cooler talk, email, blogs, whatever, that's making you go, oh, this is bad, this is bad, this is bad. What's going to come along when it gets worse and convince you now's the time to buy? Do you think your greed is going to override how much you're inundated with more negative news?
Probably
I'm
not.
sure it can happen. I've just never met that person. They're more scared. They sometimes more vindicated. Oh, I told you it was going to go down. I've yet to have anybody buy lower. Right? Oh, I sold when I'm making this up. I sold when the Dow was at 42 after it went down from 44. And I asked the question, okay, well, would you buy it back at 40? No, I'm going to wait till it gets to, and they'll pick an arbitrary number, 38. Nope, they won't. They just won't.
Is that
Their
because
emotions
they're
won't.
is that because they're expecting to go down further, or is it because they fear it's gonna go down even further? 'Cause, you know, it's the same thing, but what is their fear in doing
Probably 50-50, Jack.
Yeah.
Half of them are scared, half of them are greedy, but it's the same. My experience is this. Yeah, I'll buy at 38. I'm making some. Yeah, I'll buy at 38. It gets down to 36, and they say, I think I'm going to let it go a little bit lower. I think it's going to go to 33. It goes to 34, and I say, why not buy some of it? No, and then it goes back to 36, and I say, why not buy some of it? And they say no, and it goes to 38, and they say it's going to come back to 36, and it goes to 40. And they say, I'm going to wait on it to get to 38, and then it goes to 44, and then people go, oh my God, the market's run up so much. What's going on? How did it get to 48? Fear of missing out. The people piled in at the end. And if you don't believe it, look at evidence. Why does it start to go up and then just careen up time after time? Fear of missing out.
Right. FOMO. I was just gonna say that. Yep.
And I don't want to downgrade my role or position, but I mean, this is basic. This is tortoise in the hare stuff. But I'm thankful people are emotional. It makes for a really good living. But if we read the tortoise and the hare, applied it to investing, I'm pretty much unnecessary.
So really what you are is a psychologist.
Absolutely. 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 Oh man, not to offend anyone. I always say somehow I made a really cute young lady at age 18 want to be with me for a little while. And she wanted to major in psychology, which I thought was dumb, but she was cute enough to make me take about 6 or 7 of those courses. I had no idea it would come into play in this career, but it did.
Yeah, that's good. Couple things have come in. Jacob and Joseph, this is the day of the Jays. This is good. So Jacob, this is jump ball for anybody. My AC service tech shared some street info about cost and availability of parts and costs. Both not good. Major increases in pricing, availability of parts not good. Also, your insights. Anyone want to take that one?
So Jacob, I will refer you to maybe it was 2 weeks ago where I was talking
Yeah.
about my personal experiences with an AC unit, not just the air handler, but the outside unit as well. And part of the sales pitch was that, by the way, and I said the person used the term inflation, but they meant tariffs and cost increase. I mean, they could have meant inflation also, but I think that they were referring to the increase in price as a reaction to the tariffs by the manufacturers. And so they convinced me mathematically, we went through the math, that it would be better for me to buy the system now. Well, first of all, they showed me that, okay, if you fix everything that needs to be fixed in comparison to a new system, and you fix all those things and it could still break potentially, so that it was a great sales pitch, but it was unexpected that they would say, and I should have expected it, that they would say, all right, our price book is about to increase. So, do you want to get in before, again, the whole FOMO thing? It's like, okay, you're going to regret it down the road if the prices increase. And that's when it actually is 100% failure, because it wasn't 100% failure yet. And so, but, in peeling back the layers of that, it is related to, and it is legit, and it will happen likely, is it's not just the parts as I've shown with the Apple iPhone. It's also the process of it. It's the process of getting the goods from one place to another overseas. It's getting them through the ports. I mean, that's a big bottleneck as well. It is, okay, you got to pay the tariffs on this, or it's going to be stuck at the border. And then if you were at the front of the line, now you have to figure out paying for them, and now you're at the back of the line because you're protesting. And so it really is going to, as Coach Roy Williams would say, gum up the system. So it is going to happen. Now, to the extent that it's going to happen, don't know. I've seen, I think we've all seen, you have manufacturers and others selling that are already in anticipation of bad things happening. And you also will see, if you turn on any newscast, you'll see the prediction and pontification of, well, for this particular set or this industry, you're really not going to see the impact for 3 months. But in this industry, other industry, you're going to see it within the next 30 days. I have no idea if that's true or not. I know we're all going to see the impact at everything that we buy, whether it's Amazon or if we go into a retail shop. So, but all of that, the supply chain, all of it, not just the price that you're paying, because of what it is, and where it's manufactured. But everything that gets that from the assembly line into the store and into your pocket to use is going to be impacted, or is going to impact the price of everything that you buy. Again, I'm not trying to be catastrophic, but it's just the extent of it, we'll see. Because I think that it's a delayed reaction, and even if things get fixed, I think it's still, and then you're going to have the people who take advantage of all of this and will continue to increase their prices. You're going to see on the news about collusion, industry titans that are alleged that it's going to be alleged that they have done some price fixing in order to maximize their the prices the revenue that they receive at a time of confusion. And so you'll see all of that. You're going to see a lot of lawsuits. It hasn't even started yet, of companies that are going to, on as fundamental as constitutional grounds, saying that the president does not have the power to do what he's doing. And by the time those things happen, and that gets adjudicated, we may be back to, okay, reasonableness, because the president may have negotiated with a lot of these countries more reasonable trading at reasonable levels that are acceptable. And then who knows where we end up with China, if we're going to still be in the middle of a trading war with them 6 months from now, a year from now. I mean, everybody is, getting all up in arms, bowing out their chest, both sides. And so who knows where that is going to end and last. What is interesting, I did also hear, and I don't know if this is true or not, that people in China, the China citizens, as far as the goods that they receive from us, that they can defer. They don't need our stuff as much as we need their stuff. So they can sustain. And I think that's true for two reasons. Well, first of all, I don't know if they actually can, but in an authoritarian type society, the government can make things happen, versus in a capitalistic society like ours, where you're going to have a lot of resistance in government mandates. Although some would argue, okay, have you been watching the news for the past 2 weeks and seeing what the president has been doing? So I get it.
I'm going to jump in real quick, and this is from the Bureau of Labor Statistics, but historically, and I'm going to use the first round back in 2018 of tariffs and the supply chain. If you remember, appliances spiked, went a lot higher. We had the same demand, but you couldn't get them, right? So I'm not talking about toilet paper, where that's something you use every day. But we couldn't get appliances.
Hopefully.
We couldn't get appliances, but typically with tariffs, what happens is an initial spike, and it is big. It can be 10, 20%. But new markets are created, new suppliers are created. Demand does go down because of the increased price. Economics works. So using the small appliance or the appliances, those prices are actually below now, according to the Bureau of Labor Statistics, where they were before the tariffs in 2018. They did spike, but they come down. And then, boy, I'm going to maybe irritate some people. I don't want to.
Go for it.
I believe President Trump, whatever he feels about tariffs, I believe he also wants to extend the tax cuts. The last 3 administrations have lost the midterms in terms of control of Congress. I don't think that's lost on him. And it's not like he's got a shoe in. Those elections would occur in November of next year. That means probably would have to, if he wants, he's got to get moving, because they're going to be campaigning starting in March or April of next year. That means he's got to do something in the next 12 months to get the tax cuts, his tax cuts, extended. Congress takes, 3 months off out of the next 8 months? I don't know what his feelings are on one versus the other. It just wouldn't surprise me if They found a way to speed this along that nobody's talking about so that they can focus on that. I'm not saying it's good or bad. I'm not making any political statements, but that is on the agenda. That was a promise. And that's something a lot of people could get behind, both parties.
Well, what I saw this morning was that the House passed the big, beautiful bill. Like it's preparing to pass, but they've got the votes 216 to 214, I think is what I saw, and not one Democrat voted for it. Just so you know, which is just so sad. Like I wish we just weren't so stinking divided. It's ridiculous. It's hard to get anything done. But that is a priority in that bill, as I understand it. I'm not a political guy. I'm not one that is playing one on TV. That's just what I'd seen. A couple things as we're moving toward to the end. It is an interesting thing that Adam, I think you'd probably want to weigh in. Dow was 900 in 1981, deficit was 55 billion. It was 1,000 in 1982, the deficit was 110 billion. Dow was 40,000 in 2025, the deficit's 40 trillion. It's pretty clear what's driving the value of the stock market. That's an interesting correlation. So, okay. Well, we're at the end of the hour. Thank you, Austin. Appreciate you joining us. For anybody that was able to join us late and missed the front end, we'll put this up on the BGW CPA YouTube channel later on this afternoon, and Shoemaker has their own version of it on their own YouTube channel. So, Austin, thank you again. Jack and Adam, it's good to see you guys. I'm kind of feeling naked without our Dunkings apparel, but that was a lot of fun. So anyway,
Thanks, guys. I appreciate it.
Yeah,
all
thank
right,
you,
see you
Austin.
guys. Bye-bye.
Bye.
Bye.